What's good, cuzzies? Morning, good afternoon, good night. Welcome back. Welcome to. Appreciate the support either way. Today is January 2nd, 2026. Happy New Year. New charts, same me. Remember, nothing changes if nothing changes. So, the reason of this video, the purpose, the agenda, the move up looks like it's becoming more and more probable of happening. The reason why I'm saying this is, remember the sub-question to the first question of the confirmations. MACD, Golden Cross, Death Cross, where? RSI, Golden Cross, Death Cross, where? Stochastic RSI, Golden Cross, Death Cross, where? And then it's a matrix thereafter to figure out what's lining up with what's confluencing with what. As of right now, I've been posting about the 3-day, the 4-day. Now I'm saying I'm watching the 5-day. We're getting bullish confirmations. We're getting a Golden Cross. Where? It's below the zero line. Not the best case scenario. Can we have green candles? Can we go up to 94, 95,000, 100,000 eventually? Yes. But when things start to turn bullish, I instantly turn bearish, right? Because nothing goes up forever, nothing goes down forever. I'm not instantly bearish, let me correct myself. I just switch my mindset to, I'm not looking to catch the bottom anymore. Now I'm looking to see where I need to take profit and what are confirmations on the way down. And because the MACD is below the zero line, you need to understand what could happen when this is over. Okay? The same way I was preparing you for the bottom before the bottom, now I'm preparing you for the top before the bottom even happens. RSI, Golden Cross, Death Cross. What do I mean by that? Is the RSI above or below the moving averages? Are we in a continuation pattern where we're making higher lows, higher highs above the moving average? Are we in a continuation pattern to the downside, making lower highs, lower lows below the moving average? Where? Right now, the RSI on the mid to long time frames remains below the 50 line. That is also section B. That is also not a spot where you want to remain if the swing stops at the moving averages and we stop at 94,000. The reason why I'm saying this is, as of right now, and you can back test this, look when we had Golden Crosses on both the MACD and the RSI, but when the short-term swing was over, if we remained below the zero line on the MACD and below the 50 line on the RSI, there was a very high probability of coming back down to the most recent lows, the most recent supports, the most recent wicks, whatever you want to say. The most recent wicks in our case in the current swing is that 80 to 81,000. Now, the most bullish thing to play out is we get more hidden bullish divergence, meaning we go up to 92 to 94 to 94,000. We have a short-term consolidation. Start forming either higher lows to 80,000 on the price candles or the same lows while we continue to make higher lows on the indicator swings that match up with the swings. Because as of right now, we do look good. But once again, you have to play devil's advocate and understand where the Golden Crosses are happening. And we do have a lot of room until we're out of the out of the quicksand, meaning section B's. Section B is never a good spot to be. So yes, we are bullish right now. Yes, we could go up to the 11 and 21-day moving average on the 3-day, the 4-day, then the 5-day. Yes, that lines up with 92 to 95,000. Yes, we could have a continuation to 100,000. But if we start seeing the stochastic RSI start breaking down on 12-hour and daily time frame, the same way we used it on the bullish confirms on the way up, if we start seeing it on the daily, the 2-day, then I know we could potentially go from the 95 to 100,000 back down to 80,000. That's all I'm trying to say. I am not FOMOing in right now. In this point of the game, this is not financial advice, but I am not looking to... This is not the start of the bull market. I'm just going to keep it very simple. It's just another continuation to the upside. But the longer time frames, like the monthly and the 2-month, have already shown bearish structure. So what I'm assuming is either the same high of 126,000, a little bit of a higher high, but wicks seeing rejection, or a lower high. And if any of those three happen, while we get, once again, more bearish divergence on the monthly and the 2-month, and what does that mean? The monthly RSI, we broke the moving average. We are below it. We are extremely oversold, but we're above the 50 line. Can we go back up and use the moving average as resistance and form another lower high on the macro? Yes. Would that mean that this swing is just a dead cat bounce? Yes. Is that a hard pill to swallow for a lot of people? Yes. But at the end of the day, I trust charts over people.